What's up, my fellow economic warriors, and welcome back to Boss Economic World. The only show on the internet that peels back the layers of financial jargon, cuts through the mainstream media noise, and gives you the unvarnished truth about what's really driving your money in the world. Alright, settle down, class is in session. Today, we're flying over to the land of K-pop, kimchi, and killer semiconductors, South Korea. The headlines that just dropped this morning, November 1st, 2025, are painting a rosy picture. The screen behind him shows a headline, South Korea exports rebound in October. You've probably seen it on your Bloomberg terminal or your favorite news app. Exports climb 3.6%. Trade surplus hits a whopping $6.1 billion. Policymakers breathe a sigh of relief. It all sounds fantastic, doesn't it? It sounds like South Korea is shrugging off global headwinds and is about to blast off to the moon on a rocket fueled by memory chips and government optimism. But you know the drill here at Boss Economic World. When the headlines are this sunny, we grab our shovels, because there's usually a whole lot of complicated stuff buried just beneath the surface. Today, we're going to dig into whether this is a genuine economic liftoff, or just a dead cat bounce fueled by a holiday hangover. So, let's restore the full picture. First things first, let's talk about that headline number, exports up 3.6%. Sounds okay, right? Not amazing, but positive. But hold on. In September, the revised number was a blistering 12.6% gain. So, from September to October, growth actually slowed down dramatically. Why is nobody talking about that? Because of a little thing called Chuseok, the Korean Thanksgiving. It's a massive multi-day holiday. Think Thanksgiving, Christmas, and the 4th of July all rolled into one. The country basically shuts down. In 2024, Chuseok fell in September. So, September 2024 had fewer working days. When you compare September 2025 to that holiday-shortened month, the numbers look artificially incredible, the 12.6% gain. Now, flip it. This year, 2025, Chuseok was in October. So, October 2025 had a giant hole in its work calendar. When you compare that to a normal October 2024, the numbers look artificially weak. The fact that they even managed a 3.6% gain is, frankly, kind of impressive. This is what economists call a base effect or a calendar distortion. It's statistical noise. The real signal, the number that smart money looks at, is the exports adjusted for working day differences. And that number, my friends, is a stunner, up 14%. That's the real story. After adjusting for the holiday party, Korea's export machine is not just sputtering alone, it's firing on all cylinders. But here's the billion-dollar question, which cylinders? Because this is not an economy in perfect harmony. This is a tale of two Koreas. To understand the Korean economy right now, you have to picture a high-tech chariot being pulled by two very different beasts. On one side, you have a magnificent, thundering Pegasus with wings made of silicon. On the other, you have a tired, old workhorse struggling to pull its weight. The Pegasus, of course, is semiconductors. Memory chip shipments rocketed up 25.4%. Let me say that again, 25.4%. In a world worried about recession and slowdowns, that is an absolutely bonkers number. Why? 2 letters, AI. The artificial intelligence revolution that has been building since the early 2020s is no longer a science project. It is a full-blown industrial tsunami. Every major corporation, every government, every ambitious startup is building bigger, more powerful AI models. And what do these models crave? What is their food? High-bandwidth memory chips. Samsung and SK Hynix, Korea's two semiconductor titans, essentially have a duopoly on the latest generation of HBM4 chips. These aren't just chips, they are the foundational building blocks of the 21st century digital economy. They are the new oil, the new steel, the new digital gold. Demand for AI and the massive data centers needed to power it is so inelastic, so ferocious, that it's single-handedly propping up Korea's entire export apparatus. It's a gusher of cash that papers over a lot of cracks. Now, let's look at the tired old workhorse. While the chipmakers are having the party of a lifetime, the old guard of Korean industry is getting a black eye. Auto exports, down 10.5%. Petrochemicals, down a shocking 22%. Steel, down 21.5%. What's happening here? It's a triple whammy. High input costs, global energy prices, while off their 2022 peaks, have remained stubbornly high. For energy-intensive industries like steel and petrochemicals, this crushes profit margins. You can't make cheap plastic or steel when your electricity bill looks like a phone number. 2. Soft global demand, these are cyclical industries. When the world economy is booming, people buy more cars, and construction projects demand more steel. But right now, Europe is stagnating, and China's property crisis is still sending shockwaves through its industrial sector. There just isn't a huge appetite for these basic materials. 3. The tariff shadow, and this brings us to the elephant in the room. The United States. For the past several years, the threat and reality of US tariffs have been hanging over these industries like the sword of Damocles. Shipments to the US were down 16.2% in October, a clear sign that the pre-deal tariff pain was very, very real. So, what you're seeing is a classic two-speed economy. The future-facing tech sector is in hyperdrive, while the traditional industrial base is stuck in the mud. This creates immense internal tension and makes policymaking a nightmare. But just as this tension was reaching a boiling point, a white knight rode in from Washington. Okay, let's talk about the big one. The event that has the entire Korean business world buzzing, the finalized US-Korea trade deal, wrapped up during President Trump's whirlwind visit to Seoul just last week. For years, this has been a soap opera. Trump, in his characteristic style, has long railed against what he saw as unfair trade practices. The threat of sweeping 25% tariffs on everything from cars to electronics was a constant source of anxiety in Seoul. Remember, the US is Korea's second biggest customer after China. A full-blown trade war would be catastrophic. So, what's in this long-awaited pact? Let's break it down. First, the headline, a 15% tariff cap on Korean goods. On the surface, this looks like a huge win for Korea. They avoided the 25% doomsday scenario. But let's be real. A 15% tax is still a 15% tax. For a company like Hyundai, which operates on thin margins to compete with Toyota, Ford, and the swarm of Chinese EV makers, a 15% tariff is a gut punch. It's not a knockout, but it will definitely leave a mark. This cap is less of a victory and more of a negotiated surrender to a new, more expensive reality. It essentially institutionalizes protectionism, but at a level both sides can live with. Second, the sweetener, a $350 billion investment package. Now this is where it gets interesting. This isn't just Korea writing a check to the US. This is a package of reciprocal investments. The deal outlines a roadmap for Korean giants like Samsung, LG, and SK to build more semiconductor fabs and battery gigafactories in the United States, think Texas, Arizona, and the Rust Belt states. This is a direct continuation of the friendshoring and supply chain security narrative that started under the Biden administration and has been supercharged by Trump. In return, the deal encourages US tech firms, think AI leaders, cloud computing giants, and biotech pioneers, to invest in Korea's own tech ecosystem, like the Pangeo Techno Valley. What's the genius here? Trump gets to go back home and hold rallies in Ohio, saying, "I brought jobs back. I made the Koreans pay for it." He secures the supply of critical chips and batteries on US soil, reducing reliance on China. Meanwhile, Korea locks in its status as a critical, irreplaceable partner in the US tech supply chain. By building factories in America, they are embedding themselves so deeply into the US economy that future tariffs become an act of self-harm for Washington. It's a brilliant long-term strategic play disguised as a simple investment. They're not just selling products to America, they're building the factory in America. Third, the quiet part, safeguards for Korea's foreign exchange market. This is the clause for the finance pros in the audience. For years, the US Treasury has put Korea on its monitoring list for currency manipulation. This deal reportedly includes language that gives the Bank of Korea more leeway to intervene and stabilize the Korean won without getting slapped with a currency manipulator label. This is huge. It gives the central bank a vital tool to manage economic shocks without starting a diplomatic incident. So, the deal is a classic Trumpian masterpiece, loud, transactional, and full of big, headline-grabbing numbers. But underneath, it's a deeply pragmatic realignment of the US-Korea economic relationship for the new era of great power competition. It's a managed trade, not free trade. And it fundamentally changes the game for our next protagonist, the Bank of Korea. If you think your job is stressful, spare a thought for the governor of the Bank of Korea. Their job right now is like trying to juggle 3 flaming chainsaws while walking a tightrope over a pit of crocodiles. Chainsaw number 1, the property market bubble. Apartment prices in Seoul, particularly in ritzy areas like Gangnam, are still astronomical. Household debt is among the highest in the developed world. The BOK has been trying to cool this down by raising interest rates. If they cut rates to stimulate the economy, they risk reigniting a debt-fueled inferno that could lead to a catastrophic financial crisis down the line. Their number 1 stated priority is financial stability, which is central bank code for, please God, don't let this housing bubble pop. Chainsaw number 2, a potentially slowing economy. Before this recent export data and the trade deal, the outlook was grim. The struggling old guard industries were dragging down growth. There was immense pressure on the BOK to cut interest rates to help these companies and prevent a rise in unemployment. This is the classic growth versus stability dilemma. Chainsaw number 3, external risks. A wobbly Chinese economy next door, volatile energy prices, and the constant threat of geopolitical drama. The BOK needs to keep its powder dry in case a real global crisis hits. So, what does this new data and the US trade deal do? It gives the BOK an out. The strong 14% adjusted export growth and the decent Q3 GDP numbers give them the cover they need to say, see? The economy is resilient. The underlying growth is still there. This reduces the pressure to cut rates immediately. As Citigroup economist Jean-Luc Kim noted, this partially eases the BOK's concerns on the negative GDP output gap. In plain English, the gap between how much the economy could be producing and how much it is producing seems to be closing, thanks to those AI chips. Simultaneously, the trade deal and its currency safeguards ease concerns on external financial stability. The biggest external threat, a trade war with the US, has been neutralized, at least for now. This means when the BOK meets on November 27, they now have a much stronger argument to hold interest rates steady. They can continue their fight against the property bubble and household debt without being accused of strangling the economy. It's a temporary reprieve, a gift from the semiconductor gods and the dealmakers in Washington. So, let's zoom out and put it all together. What is the real truth behind South Korea's October surprise? 1. The headline numbers are misleading. The real story is the powerful, AI-driven surge in exports, which is strong enough to mask serious weakness in the country's traditional industrial heartland. 2. South Korea is the ultimate case study of the new global economy. It's a nation that has successfully hitched its wagon to the most powerful secular growth trend of our time, artificial intelligence. Countries that make the stuff for AI will thrive. Those that don't, won't. It's that simple. 3. The US-Korea trade deal is not about free trade, it's about strategic alignment. It's a blueprint for how middle powers can navigate the new Cold War between the US and China. By embedding its key industries within the US sphere, Korea is making a strategic choice. This also explains why exports to China were down 5.1%, a quiet but clear sign of this gradual pivot. 4. The Bank of Korea just got a get-out-of-jail-free card. They can now focus on the ticking time bomb of domestic debt without immediately crashing the economy. But the tightrope walk is far from over. Is South Korea the phoenix rising from the ashes of the trade wars? Not entirely. It's more like a cyborg phoenix. One wing is a marvel of futuristic technology, flying high and strong, while the other is old, metallic, and in need of some serious repairs. The challenge for Seoul in the coming years will be to use the incredible wealth generated by its tech wing to retool and revitalize its aging industrial body. Can they transition their auto sector to be a dominant global EV player? Can they innovate in green steel and next-generation materials? That, my friends, is the multi-trillion-dollar question. The October export data isn't the end of the story, it's the explosive opening chapter of a brand new book. And you can bet we'll be here to read every single page. That's your economic truth bomb for the day. Stay sharp, stay solvent. Class dismissed.